Hey everybody, I hope everyone is doing well and had a good day. This is the Emini review for the 5-minute chart for Thursday, January 30th, 2025. I'm just going to jump right into it, try to get the first couple of hours or so bar by bar. So going into the day, what do we have? Today we gapped up and we have a bear reversal bar on bar 1. Give me just one moment. I change these settings when I do my studies, and I'm always flipping them back and forth. But anyway, we gapped up on bar 1. And going into the day, we can see it's a trading range open. Big up, big down, lots of sideways price action. Now we have possibly a third push up. This looks like 1, 2, 3 pushes up in what might be an expanding triangle. We have lower lows, we have higher highs. So the market range is expanding, but it's still a trading range. So you can expect breakouts to fail. So if we attempt to break out to the upside, it's probably going to be sellers above. If we attempt to break out to the downside, probably buyers below. What about selling? Bar 1, 3 pushes up, reversal bar, closing on its low. You can, but the problem with selling bar 1, stop above 1, there's a couple things with it. One is that bar 1 remains the high or the low of the day, only about once a week, 20% of the time. So the odds are we're going to trade below and above bar 1. But also you take into consideration the gap up, you consider it a breakout. Is bar 1 strong enough to reverse the breakout, the bull breakout, the gap up? Probably not. Looks like we need at least a second reversal. In other words, the bulls will probably get a second leg up before there's any reversal. We went outside up on bar 2. Bar 2, markets are fractal, and it's cool because bar 2 is sort of a reflection of the overall bigger picture context. Bar 2 is an outside bar, which is an expanding triangle on a lower time frame. And as we can see here, we have an expanding triangle over the past 20 or 30 bars on the 5-minute chart. So what about buying bar 2? Well, again, it's an outside bar. It's an expanding triangle. If you're buying up here, you're buying at the top of a minor or smaller expanding triangle or trading range and a more major one here. So you're probably buying at resistance if you buy here. But as far as selling, it looks like bar 2 might need its own second leg up, probably trap traders below. We triggered the stop order below bar 1, trap traders there. So I suspect if we test lower, there's probably trapped traders looking to buy lower. Bar 3, we pulled back, but then began to rally. So this might be the second leg for bar 2. Leg 1, pull back, leg 2. But what about the bear case? What is there to sell? There's really not a reasonable stop order sell below bar 3. It's a bad signal bar. Selling pressure is weak. The bulls still look like they need a second leg up. And so we had to rally to find sellers. Bar 4, climactic bull bar. At this point, we might have 3 pushes up, the gap up, and then a pause on 1, breakout on 2, pause on 3, breakout on 4. So 1, 2, 3. It's also a bull breakout of a bull channel. We mentioned that. Possible expanding triangle, trying to get the bull breakout. The bulls really need follow through. They really need at least one more bar. And then they don't get it on bar 5. So what is bar 5? Bar 5 is a disappointment bar. So we know the odds are after 3 legs in the same direction, the odds increase that the market is going to pull back for 10 bars and 2 legs, if not reverse. So we have 1, pause, 2, pause, 3, and a breakout attempt of a bull channel, which already is low probability, maybe 25 or 30% there. And then you have a good breakout bar, but bad follow through. So think about the bulls who bought the close of 4, disappointed on 5. Those traders, yes, bar 4 will probably get a second leg up, and a bear trend is unlikely with this kind of an open. However, the bulls who bought here are disappointed with 5, and they might look to exit at break even. So it looks like today most likely is going to be maybe a bull trend from the open or some sort of trading range day. Remember yesterday, if you look at the daily chart, yesterday was a bear doji bar or bear trading range day. And so the odds are, my mistake, I meant to have the high of the day drawn in. There's probably sellers above yesterday's high. So it seems like we're going to have a hard time breaking out above this bar on the daily chart because it's a bad stop order signal bar. We just had this bear breakout. It's a trend line break. Bull trend, trend line break, maybe a retest, second leg down. So this blue line is yesterday's high. We're trying to get the breakout, but not finding follow through. And then look at bar 6. 6 rallied to the close of bar 4. We found sellers, and then it closed below its midpoint. Bar 6 is strong enough that it's probably going to get a second leg down, especially after, like I said, 3 legs up. So 6 might be a sell the close bar. You can sell a pullback, but how many traders are looking to buy here? In other words, how deep is this pullback really going to be? There might be a sense of urgency to sell here. If you bought for any reason, 6 is a bar you might look to exit longs below. And then we had a give up bar on 7. So certainly strong enough down for a second leg. 3 bar micro channel. The odds are we'll get a pullback and some sort of second leg down. The gap is also not very big and it's in a trading range. We'll probably try to close the gap as well. And a pause bar on bar 8. So probably not enough to reverse the bear breakout. Second leg down, still likely, probably sellers above. We also have a micro gap from what it looks like from the low of bar 5 and the high of 7, and certainly from the low of 6 to the high of 8. Micro gaps are a sign of strength, and they increase the probability of a second leg, and they reduce the probability that we'll get a deep pullback. So a shallow pullback on 9, sellers above 8, which was expected, but now we have a low 1 short at the bottom of a trading range. Big up, big down, with a bigger rally. So maybe 50% pullback. Again, this is I always change these for my studies, so please be patient. Give me 1 second here. Make this default. And I'll just turn off the price label. So here's 50%. We're approaching 50%. Maybe the bears get a second leg down and test the midpoint of this rally. The bulls are looking for a 50% pullback to buy, but it also depends on the approach. What do the bars look like approaching that 50% pullback level? Right now, it looks like the bears are going to get a second leg down. 10, bad stop order buy, probably sellers above and probably going at least a little bit lower. I suspect we'll go at least 1 tick below bar 7. The bears will likely get their minimum second leg. And then bar 11, a reasonable stop order buy. If I was short for any reason, I would exit shorts above bar 11. And I think 11 is also a reasonable stop order buy. You have a trading range, big up, big down, a second reversal, bull bar closing on its high, finding support at the moving average. It's a micro double bottom. There's lots of reasons to look to buy here and exit shorts because it looks like we could go higher. But in this case, the bears did a good job preventing a reasonable stop order buy from triggering. When the bears do that, it's a sign of strength. So you can see the market did not trade above bar 11. The bulls who bought the close of 11, who were front running the breakout above bar 11, got trapped on 12 and they were forced to give up. Leg 1, 2-legged pullback. Leg 2, 12, is it a second leg trap? It might be, but now we have another micro gap from these breakout points, these lows, to the close of 12, and 12 is probably strong enough to get its own second leg. Again, here's 50%, so maybe 50% pullback argument for the bulls, and you can even argue this is a third leg down, 2, 7, and 12. But let's see what the reaction is to bar 12. And we got bar 13, bull reversal bar closing on its high. Another bar I think is reasonable to exit shorts above and to buy, at least for a scalp. The problem with buying here for a swing position, for a swing trade, is this channel down is tight. So I would consider 5 through 13 a tight bear channel. Whenever you have a channel and you might not be sure if it's a tight channel or a broad channel, you should assume that it's tight and just ask yourself, how easy has it been for the bulls to make money buying through here? And the answer is it's been pretty difficult to make money buying so far. Let's see if I can find a quick example. Maybe even through here. This is a more broad bull channel, and you can see this is the opposite example, but it's a lot easier for the bears to make money. The bears are even making money selling below bars on stop orders. And so this is a more broad channel, but that's not even a great example of a broad channel. Even this is fairly tight. So that means today's chart down to bar 12 is certainly tight. And what does Al say? Tight bear channel, only want to sell. So 13, again, reasonable to buy for a scalp or exit shorts, look to sell higher. But as far as a major reversal here, it's unlikely. We need a meaningful trend line break first. 14, good entry bar, but we've reached 1 times the range of bar 13, so you have traders who will buy and scalp out on maybe during bar 14 or on the close of 14. You also have the bulls who I mentioned. They bought the close of 11, front running the breakout. They got trapped on 12, and then you have those traders also probably looking to sell somewhere up here. So there might be resistance here, and this tight bear channel is a breakout on a higher time frame. If you look at the 15-minute chart, this is simply a 2 or 3 bar breakout that will probably get its own second leg. 15, we have a bear reversal bar. You can call it a double top, low 2. Good signal bar for the bears. Context is decent. Again, tight bear channel, reversal attempt, but then a bear bar closing on its low. So if you're long, if you bought the close of 14, what do you do with 15? There's 2 options. There's a couple of options. However, I think a bad option here is putting a stop below 13. And then the reason for that, I think 13 is a skunk stop. So if you buy for any reason, I think the exit is below 15. I think we're still always in short because of this tight channel that will likely get a second leg down. But if you are buying and scaling in, maybe you put your stop somewhere down here and you buy more below 13. And the reason for that is, to me, that seems logical, because if you bought with a stop order above 13, you made 1 times your risk. So stop order bulls make money. If stop order bulls made money, then limit order bulls should make money. So buying below this breakout or this reversal and follow through, buying below here is a reasonable thing to do. 16, the bulls trying to get their second leg. 1, pull back, 2, but you can see 16 actually didn't even get to the close of 14, and that's disappointing if you're a bull. So 16 might be a sell the close bar. If you're long for any reason, maybe you just exit on the close of 16, if not below 15. Or again, you might use the wide stop. But I think this area below 13 is skunk stop territory. 17, bear breakout, but looks like a late leg in a trading range, so hard to trade it. Now, you can sell the close of 17, but if you do, you're betting on a breakout and you need immediate follow through. So you might sell the close, sell below, knowing that you're selling what might be a late leg. And then you get 18, follow through bar, but it's smaller than 17, and that's a warning that we're losing momentum. So not ideal for a late leg in a trading range. But it's a good enough entry bar. You're not disappointed. So if you sold below 17, you're probably still short. 18, maybe you're adding on. But then you get 19, and 19 is another warning. Again, we have 3 pushes down, and we're testing support to the left. Bar 80, this reversal bar, then we gapped up. So stop order traders, in theory, buying above 80, made at least 1 or at least 2 times the risk on this trade. So the odds are when we test the bar 80 high, the signal bar, where traders were trapped, there's probably support. This is a dueling lines pattern. We have a wedge bottom, 3 legs, and this double bottom with the breakout point. So reasons to buy here, but strong enough down 17 through 19, second leg down, still likely. But if you're selling here, you're scalping because you might be testing support, so you might be low in a trading range, and it's a late leg. Sellers above 19 really wasn't a great stop order buy. The signal bar is weak, didn't close on its high, the body is small, and 17 and 18 are a lot stronger compared to it. So sellers above, still second leg down likely, but the downside might be limited for the reasons I've been saying. So there might be buyers below 19. 21, bear bar, but overlapping the prior 2 bars, and it's really a nested late leg. 1, 2, 3, 1, 2. So you might have profit taking down here. Aggressive bulls might be buying. It's still a tight bear channel, but the context is getting worse and worse for the bears. And think about the couple of things. The trader's equation, you have, think about it, if you're selling here, maybe your stop's above bar 15. 1 times your risk is all the way down here, breaking out of all the bars to the left. And until there's a breakout, there's no breakout. So if you're selling here, stop up here, you really need to be certain, 60% or more certain that we're going down here before back up here, or before we even pull back. Because if you thought we were going to pull back, you would never sell here. And if it's 3 legs down in a trading range, you should be expecting a pullback. 22, bull trend bar. It's an inside bar and closing on its high. 22 is an always in flipping bar. It's always in short, but getting dangerous for the bears. If you're selling here, you need momentum as a bear, and 22 is the exact opposite of what you want to see. So you can exit shorts above 22, reasonable to buy above 22, betting that it's a late leg. We'll start to get some sort of correction, and this might be the start of a leg 1 for the bulls. 23, good follow-through bar, so breakout and follow-through. Technically, 22 is an inside bar, a non-breakout bar, but it is a trend bar with follow-through. So reversal and follow-through, uniform-sized bars closing on their highs, no overlap, and good context. This is a by-the-close breakout, high probability you get a second leg. And then 24, even more follow-through, but 24 getting smaller. So losing momentum, but still strong enough for a second leg. I mentioned micro gaps over here. The same can be said here. We have a micro gap from the high of bar 22 to the low of 24, and the bars are all strong with very little overlap. And that's a hint that this is probably not going to pull back very far before we get a second leg. So if you're trying to buy, like over here, at the breakout point, I mentioned that signal bar. If you want to do the same thing here and buy the high of 22, probably going to be disappointed because the market is running away without you. This does not look like it's going to get a deep pullback. It looks like you need to buy the close or buy a shallow pullback. There's a sense of urgency here, and again, the context is good. 3 legs down on what's probably a trading range day. 25, profit taking from the bulls. We're testing resistance, this breakout point here, but probably a minor reversal. 25 is not enough to undo this breakout. The context is good. The physical appearance of the breakout is good. And maybe real quick, let's look at 11:30 on the 1 minute. Just want to show a point with that. Okay, here's the bull breakout. If you're a bear, through here, even a limit order bear, how easy is it for you to make money selling during this? It's really basically impossible. And that's important to know because if limit order traders are getting trapped, or even, I'll change that wording, if traders are trapped, then the breakout is probably strong and you're going to get a second leg. You're going to get follow through. If you're a bull and you want to buy a pullback here, meaning you want to buy below a bar, you didn't get triggered until all the way up here. So you were trapped out through all of this. And again, if you're a bear selling above bars, you're selling more, trying to fix the trade. You're getting totally trapped in this trade, and that's going to provide fuel for a second leg up. So it's important to know what's going on the lower time frames too, but you can infer that looking at this breakout because it's orderly, it's not climactic. The bars are similar in size. They're opening on their lows, closing on their highs, no overlap. So beginning a second leg up, high one buy, reasonable to buy above 26 with a stop order, and probably going at least a little bit higher. 27 a pause bar, so we're starting to channel, spike, pullback, channel, so bull breakout, pause, maybe another breakout, pause, and then a little climactic on 29. We're also getting close to the bar 9 high, which happens to also be the prior day's high. And the significance of that is the market cycle. Bear breakout, pullback to the high of bar 9, and then a bear channel. Channels evolve into trading ranges, and that's what's happening here. This is probably resistance above bar 9, so the upside here might be limited. You can see that exactly happening on bar 30. Pretty good bull breakout and follow through, but this is a tight spike in channel on a smaller time frame, and this might be 1, 2, 3 legs up to resistance. So you might start to pull back here, and you can see the momentum getting lost by the bulls. Good trend bar, or even back here. Trend bar, bad follow through, trend bar, bad follow through at resistance. So reasonable to reduce your position if you're a bull. Bears might start to look to sell, betting that it's big down, big up, and we're high in a trading range, but this is enough. Buying that the traders who sold down here were trapped, they might not be able to get out at break even. Or, let me rephrase that. If you sold the close of 21, and then you get this, I'm not so sure you're going to get back to the close of 21. But, and let's change that from the close of 21 to selling below 20. Let's say you sell below bar 20, it's a low one short after a bear breakout. A little bit dangerous because of context, but you take a reasonable stop order trade below 20, and then you take another reasonable stop order trade up here. 25, not so reasonable. Signal bar is not great. But more importantly, the context, it's following a strong bull breakout that's probably going to get a second leg, and it does. And then a couple of bad high ones for the bulls, bad context, bad signal bars, and then a give up bar. So maybe a bear sells more below 33. The bear who sold below 20 is probably so disappointed in the trade that they don't even care if they get out at break even on this entry. They might just look to break even on the entire trade. So you sell here, you sell more 33. Your average price is this middle red line. And you can see what happened on 36, and you can see the reaction, 36, 37. So bear breakout 33, give up bar, probably going at least a little bit lower, reasonable to exit longs below it. But still, might be always in long, but short term, probably going to get a second leg. So okay to exit longs, buy again above a bull bar. So breakout and follow through going lower, implied pullback, second leg down, testing support. And then bull bar 37, closing on its high. It's a bar that if you're short for any reason, I think it's reasonable to exit above it. And if you're trading always in, you probably buy above 37, use the wide stop. But this is a tight enough bear channel that a second leg down is likely. And that's what 39 is. 39 broke the trend line. That's good for the bulls. Bear trend line break, retest. And then trying to get a trend resumption 40. So 40 is certainly a bar that I would exit shorts above, and it's reasonable to buy above 40. The argument, you could say it's a major trend reversal. We have a bear trend line break, higher low, major trend reversal. Buy above 37, buy above 40, second reversal, higher probability. And compare the strength of the rally to the sell-off. You'll see a lot of tails below bars. Bars are small, then big, then small, and that's unsustainable behavior. This is more climactic, and again, this is more orderly and controlled, and the sheer size of it, this is about a 50% pullback as well, or at least looks like it is. So we're in that neighborhood. Bull bar 41, always in long, probably buy the close here, going at least a little bit higher, and then no reason to sell. If you're an always in bull, where do you sell? There's really no reason yet, even here, no reason to sell, and you just hold long. Maybe you exit below 51. It's a reversal bar. You can call it a late leg. Maybe it's leg 1, pull back, leg 2. Maybe 1, 2, 3. But if you do exit, you can still buy again above a bull bar. And you never would have exited below 51 in this case. Tight bull channel, only one buy. But the closer we get to the high of the range, we can't forget what happened earlier in the day. And traders got trapped up here on this bear breakout. And this might simply be a very deep pullback. And the bears could get a delayed second leg for this. And think about the bull target, a common target, especially on trading range days, is leg 1 equals leg 2. 1, pullback, 2. And a couple of reasons to look to sell up here. Not to mention it's the top of a trading range. But still tight enough channel, okay to hold. But it's starting to get overlap and really small bars. So tight trading range might be 50-50. I think it's reasonable to exit below 55 if you're long. Bulls trying to get the breakout on 57, but tight trading range, they need follow through and they don't get it. So again, reasonable to exit below 58 if you're long. As far as selling, it might be a little premature. This is okay for the bears. We're going sideways, but better if they can break the trend line in a more meaningful way than this. Maybe a high 2, 62. Bulls trying to get trend resumption again. 66, a little bit climactic. Let me redraw this line over here. And it looks like we're testing close to that area where stop order traders got trapped earlier in the day. And we're getting the bull breakout to a new high, but it's just one bar. So the rally is decent, but only one bar is really breaking out. The bulls need follow through, and they don't get it. So 68, disappointing. Follow through, it's enough that traders who bought for any reason might exit on the close. They might try to exit above this bar. It's a bad high one. The rally is strong enough for a second leg, but again, might be a late leg. 1, 2, or 2, and 3. Breakout of a bull channel and a double top with the high of the day in an overall trading range day. So it can be dangerous to buy up here. If you listen to my videos, you hear me repeat myself over and over. I talk about basically the same thing, and those things are the market cycle, leg count, and breakouts. Those are really the fundamental, the most important concepts to understand, and really just keep studying the same things over and over. The high one going higher for the bulls, and this bull breakout, implied pullback getting its second leg, but there might be sellers above 67 disappointed with this pullback. Going a little bit higher, 3-bar micro channel, but late leg. And you can count it all sorts of different ways. Maybe 1 or 1, 2, 3. Maybe you say this resets the count, and this is leg 2. It's really dangerous to reset the leg count in an overall trading range environment. And for me, I'd probably call this leg 3. 1, 2, 3, and 3 subdivided into 2. So I would personally feel uncomfortable holding long here, and if I was holding long, I would exit below a bear bar, closing below its midpoint. 72 is that exact bear bar that I'm talking about. I don't think it's worth holding long here when you've had several legs up on a trading range day, and this could pull back. Where can it pull back to? Well, we had a tight trading range here, which is an area of agreement, and most breakouts of trading ranges fail. The market found an area of agreement here, trying to break out, but we could easily pull back into this range. We triggered the stop order below 72. We have a high 1 buy, but still a late leg, and the signal bar is weak, and the bear breakout, 72, 73, is enough that there's probably disappointed traders above the close of 71, looking to sell, which would lead to a second leg down. In this case, a surprising big second leg down, 74. Huge bear bar, second leg down, likely, but a huge bar on a trading range day can be dangerous. You need momentum. So if you're selling the close of 74, 1 times the range of the bar, 1 times your risk is all the way down here. So you really need, again, you need momentum if you're selling here. And you get it on 75. But now, still theoretical stop up here. If you're selling, 1 times the risk is all the way down here. Realistically, you'd probably tighten your stop, but still, even if you're going for 1 times the range of the bar to here, you're selling now low in the trading range and you're testing support. So not ideal. The breakout is big and looks strong for the bears, but the context is really not great. It's not even breaking out of this pivot point, the 36 low, and then sort of a violent reversal up on 76, 2-bar reversal, big down, big up, enough that probably going to go more sideways into the close. The bears will still probably get a second leg down, but 76 might need its own second leg up first. So going higher, pulling back even deeper. But after this breakout, there's probably sellers up here in the sell zone. The sell zone is just the upper half of a breakout or the upper half of even just a single bar. So here's the midpoint. We're back in the sell zone. So buying here, not ideal because the trader's equation. Stop here, you buy here, your target's all the way up here, but there's probably a limited upside because traders just got trapped up here. And there's probably sellers not far above. And you can see 78 testing just a little bit higher before finding sellers. Now for stop orders today. I think it's reasonable to sell below bar 6, buy above 13. I think 17 is aggressive, but buying above 22, 23, 24, that's all reasonable. 28, sell below 33, buy above 37, 40, and all of these bull bars. 56 is reasonable, 62 is reasonable. Maybe buy the close here, but getting dangerous. And then at least an exit below 72. It's an aggressive sell, but reasonable. And then if you're selling here, you need to be really quick. You need good calibrated expectations. And for me personally, a couple of things with over here. You're late in the day, so your time is limited to capture that second leg. But it's also a big bar on a trading range day, and those typically pull back. So really not my favorite bar to sell here. And same with these bars. And for my trades today, I really just had one signal. It was bar 24. And what I did is I bought the close of 24, I bought the midpoint of 24, and I bought above bar 28. And I exited one lot at a measured move of 24, which is basically 1 times the actual risk. And I exited the rest below 33, and I did not end up re-entering. So this was it's a type of trade that the entries are fine, but the management needs work. And there's a couple of things I can do. I think it's okay to exit below 33 if I'm willing to re-enter above 37 or 40. And if I'm not willing to re-enter, this is still a minor reversal. I can hold long, stop down here, and look to capture that second leg. In this case, a couple of different targets. I mentioned leg 1, leg 2. That's reasonable. You can also go for a measured move of the breakout. Also reasonable. You can see the reaction to it there. But that was it for me. And again, I'm just focusing on breakouts and second legs, and I'm focusing on a 3-bar micro channel signal. So this was as good as it gets for me today. The context was good, 3 legs down, strong leg 1 breakout. The breakout itself was very strong. This is a very high probability trade. Of course, the management, again, needs a lot of work, but that's what I'm doing, working on my craft. So that's going to be it for today. Thanks everybody for watching, and I hope everyone has a good night.